Hey, this is Edward. Today, I want to share a playbook on buying a business for 2026. It's going to be a fast walkthrough for operators or people that have fairly high active income. Maybe you're a corporate professional in the corporate world and you have some liquidity set aside, typically above 100K liquid, above 700K, not 700, but 700 plus in credit score in US specifically. It's very similar credit score in Canada if you're in Canada. And ideally, you have some skills that can translate into business growth, or you manage people and lead people. So this is that introduction to that. You got to be aware that there's a what is called a silver tsunami, which is essentially baby boomers retiring. There's tens of thousands of baby boomers retiring daily, which means there's going to be a supply of businesses for sale. And if you're the right type of buyer for some of these businesses, you can get into some fairly good deals and increase your active income, get into business ownership, build equity, build wealth over time. And a quick way of understanding that is just go to bizbuysell.com and I'll show you this quick website. And I've just filtered on this website deals above 500,000 in SDE, which is essentially almost very similar to cash flow. And if you're looking at deals available, there's more than 1,500 deals that were listed. It's probably a lot more deals available because it's just kind of like an error on the website when you're filtering down. But you can see a lot of different kinds of deals in different cities, different states, and you can actually look at some of these opportunities and do them if you have experience in some of these industries. And what's interesting is a lot of people will say, hey, these deals are bad. Nobody is going to sell a company that's good. It's typically a bad deal and so forth. And that somewhat is true. A lot of these deals are not going to be as good as they're promoted here. But at the end of the day, if you really know the process of acquiring a company, you're going to filter through a lot of these opportunities. Around 10 to 20% of these opportunities can end up being life-changing for you if you know what you're doing. So you got to be good at the process and you need to follow a process to be able to get to that outcome. Now, there's other ways of looking at deals as well. It's not just about looking at biz buy sell. So I was a minority owner in three different deals in the past. In our accelerator, I also worked on hundreds of deals being closed. And if you want to essentially get more access to deals closed and you want to see how they're getting closed, what you can also do is you can send me a private message on LinkedIn. Typically, you can find my LinkedIn. My name is Edward Ambrosi, and I'll send over some examples of clients that we've closed deals with so you can see for yourself. But typically, who's going to get success in 2026 is going to be different than the former years. We've been doing this for a little bit over a decade, but the buyer that's really going to get results now is going to be what I call a local value add strategic owner. So essentially, a person that can really add a lot of value locally to deals and that can scale a local deal for a lot of add-ons. So they're buying like a platform company initially, and then they're doing more add-ons to that company. And again, these people typically have fairly good liquidity, 100K to up to 500,000, and they have fairly high business acumen and can add a lot of value on the company. Maybe for means of sales, maybe for means of marketing, maybe they understand AI or financial engineering, or they understand the product development, the customer support side, management, setting up reporting, keeping people accountable in general. A lot of these things are transferable in a lot of these different business models. And if you're one of these people and you have some of these traits and some of these situations, you're probably going to be able to do this. And here's the formula that I think works right now. Businesses in between 350K in cash flow up to 3 million EBITDA, the multiples as far as the value on this net profit is typically in between 2.5x up to 6x. It really depends on the industry and the target. And what you're really doing in a lot of these deals, sub 6 million in enterprise values, you're doing an SBA 7A loan, 70 to 90% out of a purchase price value, or you might do some conventional lending. It might also work. It depends on the deal, but down payment of that is a little bit higher. Or you might do what is called as big, and you can essentially look into some of these loans. Again, as big loans are essentially on bigger deals, not on smaller deals. So if you're looking at deals above 6, 7, 8 million value, where SBA is not going to do as well, then you can look into that. I can introduce you to both parties that do both of these mechanisms. Now, what industries you should target? So you need to look into total addressable market. So especially if you're looking into an industry, you need to know how many targets are available in general. If there's less than 10,000 or 5,000 targets, it's not really an industry where you're going to be able to find opportunities at scale as many. So you want to get into something that has it's highly fragmented essentially. There's a lot of different players, there's a lot of different kinds of businesses, and you can find opportunities. You're also going to look into an industry that is AI proof, meaning AI is not going to be able to fully replace the industry or the operations in that industry. And typically these are boring based businesses that still require a physical presence, physical interaction, physical work, where essentially it's not fully digital yet. A lot of these digitalized businesses that have digital presences can still can somewhat be replaced by AI in the future, so they're not as AI proof. Now we've still done a lot of deals in cybersecurity and e-commerce and IT services and so forth, so those are still valid. But again, businesses like air conditioning, plumbing, where AI specifically, AI-based services are not going to be able to replace them as fast, are probably going to be better industries to target for the next 5 to 10 years. The third question is, can you really add value based on your experience to the company? Are you going to go out of your way to go and meet the company, to go on site and invest into traveling and invest into seeing some of these businesses? Will you be able, just in case, to run that company? Those are some of the questions you need to ask yourself to be able to do this. Now, as I said, there's not only biz buy sell. You're looking at deals on biz buy sell, and you're essentially looking at brokered deals. One of the more amazing ways to go into deals is to directly reach out to companies. And a lot of people do that, but a lot of people don't do it effectively. They don't know how to build a pipeline for the next 6, 12 months. If you're looking to do that, if you want to build an off-market process to getting in front of businesses, and you're a buyer and you're in that situation, you want to start doing this, I highly recommend you to look into this. And this is one of the things we specialize in as far as helping people because this allows you to have an advantage. Not everybody does this, or who does this doesn't do it effectively. And then another thing that people should do is actually build a nationwide network as far as CPAs, lawyers, and bankers, because a lot of the deal flow also come from some of these people. If you don't know how to build a funnel and a process with this, you're also going to lose out on opportunities and deals that are not necessarily just broker deals. So keep in mind, if you want to set this up, just send me a direct message on LinkedIn and we can talk about it. But here's a sample SBA deal structure that works fairly well for deals sub 6 million in value. So you can get an SBA loan for around 80 to even up to, in some cases, 90% of a purchase price, and you can put 5 to 10% down. And you can also do in between 5 to even 15% seller financing, ideally lower interest rate on the seller financing and a full standby note, which means essentially you're not paying the seller financing until you're paying off the SBA loan on the amortization time. SBA loan goes for up to 10 years in amortization time. You can also get pari financing with it, and you can also maybe get some mixed up financing where you would be able to buy even real estate of a business. But if you need more details, happy to connect you to guys that do this. And you got to understand what's a good deal very quickly in 2026 and what's a bad deal. And you really need to understand what a good deal is. And one of the main things with that is a debt service cover ratio. You really need to be very aware how to calculate these numbers and how to correctly calculate your add backs and take an average of that and be able to model a deal very, very quickly because you don't want to waste time on deals in 2026. You want to look into the team of that company. So essentially the organizational chart and what are the roles of these individuals. You want to see a long-term team in place. You don't want to see a few employees that have been for a few years. You want to see a good management team that's been around for, in some cases, 10 plus years that can help you in the transition process, not just be fully reliant on the owner. So that's the second thing you're looking for to find a good deal. You're also looking to resistance of a company to different recessions or events in the economy from the past. So you're looking for different events of the industry. You're looking for different mini recessions that happened in the past so you can see how the business reacted to that. You also want to make sure, as I said, it's an AI-proof business next 10 years. You're planning to sell this company faster than the amortization time, ideally before AI completely takes over the world, right? So you want to get into a space that will make you more money eventually. Now, some due diligence expectations as far as fees you will be eventually paid to different professionals. So there's financial due diligence, there's commercial due diligence, and there's legal due diligence. Now, typically on deals under 25 million revenue, you're going to get charged in between $10,000 to up to even $40,000, depending on size, industry, and complexity. And you can see I've talked to different QE professionals, and they've sent me some DMs on some of these things. But deeper quality of earnings is going to be expected in between 10 to 15,000, and the timeline is going to be typically 2 weeks on that. And then you will typically need some commercial and operational due diligence, maybe with an M&A firm or an industry expert to be able to help you with some custom research on that company to do some analysis of operational side to make sure that you're getting into a solid deal with solid operations. And then the third one is legal, which is legal due diligence, legal agreements, and setting up over shareholder agreements and the entities and the transfers and taking care of all the due diligence with that. I mean, you on the lower end, you'll pay in between again 10,000, 15,000 on smaller deals, 1 to 2 million, 3 million of value, and then up to same as QE, up to $40,000, right? So keep in mind you can also delay some of these fees with some of these professionals. If you're getting into the deal, you could do a delayed fee and get a loan and use some working capital out of a loan to then pay some of these professionals a little bit later. That's also a practice you can use, but again, you got to be very specific when you do it and how you do it. And one of the most important things is post acquisitions. What are you going to do in the next 12 months? How are you going to improve sales? How are you going to improve the service? How are you going to hire new people? How are you going to add better systems and better reporting? Are you going to raise prices? How that's going to affect conversions and so forth. So you need to have a step-by-step plan on what are you going to do after the acquisition is done, because the real hard work happens after the acquisition is closed. It doesn't just happen when you close the acquisition. The acquisition could take in between 3 to 4 to 5 months to close if you're doing it professionally and properly with the right advisors in your team. But it could take a little bit longer. It doesn't matter. As long as you're buying the right company, you find the right fit for you, you're still going to bump up your income. You're still going to build up your wealth. And this is the point of this video, is to understand how to surround yourself with a team and is to have a process so that you can increase your success rate, do it quicker, and just get into the right deal for yourself. So what you can do is you can DM me deals. It's essentially, we would do a call. We would set up a Zoom call. We would build up your strategy for 2026 to buy a company. We're going to give you essentially some of our toolkits to find your deals. We're going to give you our process for getting deals done. And when you're going to work with us, if you're going to decide to work with us in the next few weeks, we're going to submit a proper offer on a deal. You're also going to get a full list of all the pre-vetted on-market deals with pre-analysis done, financial modeling done. You're going to get our templates. You're going to get our structure to close that deal. And then we're going to introduce you to different parties. If you're going to need financing, we can introduce you to financiers. If you're going to need investors, we can introduce you to that. And then we can kind of put the deal together for you, make sure you're actually successful. So if you find this helpful, just DM me on LinkedIn and we can talk about it then. Thanks.